Welcome. I'm Maria, and this is Money How Europe, the podcast about financial education, investing, and building wealth across Europe. Now, let's find out how. Our first guest is Annamaria Lusardi, a professor at Stanford University and one of the world's leading experts on financial literacy. Annamaria Lusardi, welcome to Money How.
I'm very happy to be here. Thank you.
You often say that financial literacy is a life skill, not just economic skill, but many young people finish education without understanding taxes, loans, inflation, or investing. Why do so many education systems still treat it as optional rather than essential, subject?
Yes, unfortunately, we see that around the world, I think school are not yet added, have not added a financial literacy, personal finance in their curriculum. And unfortunately, it is necessary now. We need to have it in school because it is as essential as reading and writing. School today should be laboratories that allow people to understand the world around them. And this is critically important. Young people today will make so many financial decisions. And it is important for them and for society to be able to have the skills and knowledge to make this decision well and to do it in a way that's conducive to good outcomes.
Yeah, but introducing personal finance as a mandatory subject into schools and producing real outcomes are often two different things. So, how many US states now require personal finance education in high school?
So we have now as many as 30 states making financial education mandatory in school. That's, I think, a big change because many of those states have required financial education recently. So it is a recent situation because I think many people are finally realizing, probably many parents as well, and many policymakers that this is important to have. And so we do see again this strong trend toward having it in school, I would say in the US, but also around the world.
I heard that in some states in US, student must pass a financial literacy test before graduation. Is that
Yes.
true?
Yeah, so in some states, the requirement is to have, first of all, a standalone course, and which also means that you need to have a test at the end, and you need to pass a test in order to be able to satisfy that requirement. This is actually what making it mandatory means often, that you have to it's a regular course with exams at the end, and therefore student will have to pass also a test. In some cases, state have only require, that people pass a test potentially without having a course. But I think having a standalone course is probably the most ideal situation. And so in what I think would be best to have it in school.
Is this financial education independent? Who is teaching children about financial things?
Yeah, so well, in school, it should be a teacher and it should be a trained teacher. As you know, because it's a new topic, it's not that teachers know how to teach it. They probably didn't have that exposure as well, that education as well. And so once, if you have it in school, then you should also train the teacher. This is, for example, what's happening at the moment in California. California was one of the 26 states in the US to pass a mandatory requirement to have financial literacy in school. So what they did as well is there is a transition period when the state is preparing a curriculum that every school can adopt. and they are also training teacher. And in fact, Stanford is participating to that. And so this summer, for example, my center is organizing a teacher training for 1 week held here at Stanford in July.
Great. Was this driven by, I don't know, policymakers or economists, central banks, or growing household financial problems? Why? What changed? How?
Why do we have it in school
Yes.
now? Yes, that's a great question. And we have it in school now because the world is changing. The world is changing and we require new skills. And I think it has become very clear to policymakers that it's important to train people because prevention is better than the cure. And I have to say, often and over time, I think the crises that we have witnesses have been a really big push to have financial education. So, for example, during the subprime crisis in the US, we have seen that people didn't really make good decision or didn't get the best mortgage for the house, and that had consequences at the aggregate level. With the pandemic, we saw that people didn't have precautionary savings, weren't able to face, didn't have resources to face a small shock, let alone a big one. In the US in particular, as you know, students take up loans to go to college. And those loans as well, now we see are experiencing difficulties. Many people are not able to repay those loans as well. So more and more, I think both policymakers, but I would say also parents, young people as well, see that this is a knowledge that they need. For example, not only we teach financial literacy in high school, but at Stanford, we teach personal finance at the university as well. It's an elective course, and it is the third most popular course at Stanford.
Wow.
Right?
Great.
And so the demand is coming from everywhere. And I have to say, happy to report, even the young people are demanding this. They want this course. They are demanding that they to be equipped with the skills they need today to face this changing world.
So there has to be also a political will. Do you think that politicians are financially literate in general?
Yeah, it's a great and difficult question, but let me answer the first one. Do we need political will? And the answer is yes, because to make it mandatory, of course, you need a law that makes financial education mandatory. So normally it's the Secretary of Education that will have to issue this law, will have to make this change. In the US, for example, the education policy is decided at the state level. So in our case in California, it was in a sense the governor and the state politician who needed to make this change. Now, to your second question, are policymakers financially literate? I haven't done that test, so I don't know. I cannot, I don't have data that shows whether they are or whether they are not. But I do think that more and more now they are recognizing that the cost of financial literacy is very high. So I think they have, at least they have witnessed that fact, and I think they are a lot more, I think, inclined now to try to address this problem. If I have to say, if I look at the countries and what they are doing, often, for example, public debt, how much public debt has been going up, how much spending has been going up. I think some of these policy potentially are not very wise, but it might be beyond financial literacy.
A few years ago, I tried to find out if our politicians are financial literate, and they didn't respond to my questions.
Right,
yeah. So, one more question about athletes. I don't know if you are familiar with Luka Dončić, one of the world's best basketball player and one of the biggest stars in NBA. He's from Slovenia. And some Slovenian basketball players, successful basketball players, told me that that many players in professional league are required to go through some form of financial literacy training before receiving their first major contract or $1 million paycheck. Is that true?
I hope it is true. And it's a requirement. It's a recent requirement now. But I have actually studied a professional football player, not basketball player, but I think the evidence is very similar, which is that, these people which have multi-million dollar contract, right? Very early on, of course, right? They are young when they are successful. Unfortunately, we see them going bankrupt as soon as they stop playing. So, there is evidence, and the athletes are a quintessential evidence that people, are not good in managing this large amount of money. First of all, it's very complex to manage this money. And because also everybody knows that you are so rich, everybody tries, in a sense, to come and get some of your money as well, right? So it's a difficult situation. And I'm very glad we have worked here in the US and try to indeed push for financial education for these athletes. And now you might wonder, why do we care so much? And we care so much because of what you have said. Everybody looks up to athletes. They are our heroes. They are our reference. And the fact that they experience this difficulty, first of all, shows that they are like us when it comes to money. And second, that, this is a waste and we can address it indeed with financial education. So I actually think that, that's another reason why we should have it in the schools, because we need this education as early as possible. If you give this education to these young people before they, set up the contract, it's almost too late, right? They don't have the time, they don't have the focus. And so providing it earlier when they are in school, I think can be a better base on which they can build once they get this very large contract. And frankly, my recommendation is nobody, right, is able to manage well this large amount of money. You need professional help, right? And I'm always surprised that, like people have coaches, they have medical doctor around them. And so we have to think also of the type of professional advice, which is unbiased, rigorous, and particularly targeted to these very young people.
Now that you're talking about influence, many young people today learn about investing primarily through, TikTok, YouTube, Instagram, rather than, schools or traditional institutions. And social media has created an environment where people believe they understand investing after just watching a handful of short videos. What role you think should financial influencers play in financial education?
Questions, and I still do not know what's the best answer to that. And the reason is we have to realize, right, that and we have to respect as well what young people want, right? And young people now think that they can get good information in this way, right? I'm very skeptical of the quality of financial education offered by TikTok or social media. And the reason is this is a difficult concept. This is our difficult ideas. That's why we teach it at the university. It's not such a simple topic that, 18 years old or a young person, can take up and explain to everybody. And we run the risk of providing wrong information. At the same time, I think what the TikToker have understood is that people are looking for, simple information, simplified information. They are looking for a language that they understand. They are looking for ways to also, learn this, they want to learn in a fun way. They don't want to necessarily learn in a boring way, watching a long class, reading a long textbook and so on. So, we have to respect that. And I wonder how we can, meet this demand, right? I know there is a huge demand, so many people are looking for this information. But, I also want to bring the warning that, this information can be so distorted, can be so simplified, and eventually could even be wrong, right? So a warning about this, and a warning to us as well that, we need to start speaking the language that young people want us to hear.
But everything is changing so fast, and today you can buy a stock or cryptocurrency or an option with just one tap on your phone, and investing has become easier more than ever. But has the quality of financial decision making improved at the same pace? What do you think?
No, the answer is no, and that's the reason why we need financial education. You are absolutely right that what has happened with technology and also with the decreasing cost as well. Now, there used to be a high cost, for example, of buying individual stocks. Now, we have access. I mean, in the US, with $1, you can buy a mutual funds. So you don't need a large amount of money to invest in the market. And also we have access to financial instruments like crypto, which are riskier than other financial instruments. So you are right that, we have access to investing. The costs have really been going down, but again, right, these are complex instruments. And we need to understand them in order to make good decisions, because investing in something we do not understand can have actually bad consequences. So I mean, yet again, right, we need to complement, in a sense, those changes, right? For example, this capacity for all of us, and in particular for young people, to access the financial market. We need to complement this with the knowledge and education they need in order to be able to make the best decision here about their investment.
I would really like to pick your brain about Slovenian financial behavior, because Slovenian currently hold around 30 billion euros in bank deposits, most of it earning little or none interest. That is an enormous sum for a country of 2 million people. And as you probably know, inflation has quietly eroded that capital, but yet behavior has not changed significantly. What does that tell you about trust, risk perception, and financial culture, or maybe financial literacy of Slovenian people?
Well, it's hard to make inferences just from this one fact, but let me just tell you that this is actually the evidence in most countries in Europe. And this is why, for example, the European Commission now has taken action in order to indeed, make sure that people are, investing the money which is left on the bank account, right? So I think what it says is that people indeed, do not know how to invest and do not know what to do with the money. Often, if the money is left, not only in saving account, but in checking account, right, earning very little interest, right? This is to the detriment of individual and also of the economy, because this money might not be put to the best use, and so on. But yet again, right, it's, before you tell people to invest, you have also to give them the skill and knowledge so that they know what to do with their investment, right? We also don't want to risk people losing their money to the wrong investment. So it is a difficult problem to have. And I do think that the solution goes in the direction of indicated by the European Commission to really, in a sense, make sure that people understand that they should put this money to use, but at the same time also promote a good use and certainly promote financial education.
I think it's very interesting because Slovenians actually rank relatively high in financial literacy according to Eurobarometer data, around 5th place in Europe. So, do you think there can be a difference between theoretical financial knowledge and actual financial behavior? Because the gap here is huge.
A lot of people ask me this question, and I actually think there is a misunderstanding here. First of all, I actually think that knowledge is very powerful. And people say, well, you might have the knowledge, but, it doesn't translate into good behavior. That's not my experience. And we see it in our student as well. I actually think that the knowledge is the prerequisite to make good financial decision. Now, we have to recognize, though, that for financial decision, to make good decision, other things are needed. So, for example, if I give financial literacy to somebody who doesn't have any savings, of course, they are not going to invest, right? So, for example, you need to have also savings, or you need to have a specific situation. In some cases, people are constrained, right? Because in this moment, for example, they might have commitment to do certain things, right? So, for example, people say, why is it that you don't invest in the stock market? But people might think, might actually want to make other decisions. Potentially, they are saving to buy a house, they are saving to buy a car, right? So you have to consider that there are many factors that come into financial decision making. For example, preferences, for example, your need, your financial situation, your income today and in the future. And this is why, knowledge is only one component of financial behavior, but I think it's a very powerful component for financial behavior. So I think if we want good financial decisions, an investment in financial education is a good investment.
What's interesting is also that Slovenians also rank surprisingly high in cryptocurrency adoption. According to some estimates, around 50% of the population owns crypto assets. So we have two extremes, huge amount of money sitting in bank deposits, and, on the other side, highly volatile crypto assets.
Yeah, but again, this is evidence in my view, right, that people don't have a lot of, I think, understanding of investing. First of all, investing is one of the most difficult concepts, right? And I see, like, keeping money in the bank account and investing in crypto a lot, right, as a little bit the same evidence, right, that people are, probably not very knowledgeable about investing. And this is why we see this behavior, right? But this is a common behaviors in other countries as well. So, either lack of use or excessive risk taking, right? And it might just be the same evidence that, yet again, we don't have a good sense or a good understanding of what investing is and how we should be also investing our money for the future.
Slovenia also comes from a socialist system where capital markets and investing culture barely existed. You think this is also important?
I think it is important, actually. And we have seen that, some of these cultural experiences, or, for example, experiences in the past. So, for example, in the US, people who went through the Great Depression, right, ended up being a lot more, thrifty and sensitive, and, for example, much more likely to have a lot of savings. We see that country that experience hyperinflation, right, are, have a different financial behavior because, they understood, for example, what that experience meant, right? So I do believe that this lack of experience, right, this lack of the lack of experience in having in a sense, financial market, or not living in a free market, could also shape the behavior. And that's also, in my view, even more evidence and more more motivation to actually have financial knowledge, because, where do people learn? For example, right? They learn from the parents,
yes,
right? But and where do the parents learn? From the grandparents, yeah, right? But in this case, right, there was not an experience. And frankly, it's the same now for most other countries as well, because, Like the world is changing so fast that it's actually hard to learn from parents because parents didn't have the type of pension, for example, that we have today, right? That we have also to, for example, say for our pension, parents didn't have to deal with cryptos and so on. So, that learning from parents now is very limited.
And how long does it take a society to build a genuine investing culture? Do you have any experience in
Yeah,
that area?
it's a great question, and I actually do think it takes a while. But and that's all I always say. It takes visionary leaders to promote financial education, because education, as every education, not just a financial education, takes some time, right, to develop. And I think it's critically important to start in the school is because we need to have it as quickly as possible. Otherwise, if we miss, any year we wait, we are going to miss one generation, right, that can have access to that education. But that clearly cannot be the only things to do, right? Because it takes so long, for example, if you leave it to just that, right, to like people learning and so on, it can take a very long time. And this is why I actually think it's very important that I would say, almost create a campaign or create a really, change in society, so that this topic, can become a topic that we make it very normal, that it's a topic that we discuss and we discuss regularly. For example, this year during a Global Money Week, that, as you know, is this week dedicated to young people in March, like the topic was really, let's talk about money. So we need, I think, to start this cultural change where we all make money, part of the conversation that we have. And we build this culture of investing, right? This culture of, it's like health. We want to be healthy, right? And to be healthy today, for example, it's not that you just need to go to the doctor, but you need to have good practices, right? For example, you need to move, right? Be active. You need to eat healthy. You need to exercise, and you need to sleep a certain amount of hours and so on. And I think it's the same for our financial health. We need to be financially healthy and take care of ourselves. I also think this is disproportionately important for the young, but for everybody. The fact that, for example, we live longer is going to change completely our life, right? But it also needs that disproportionately, we need to take care of ourselves. We need to take care of our financial security for a very long life, right? And to me, this is why also we need to invest. We need to grow our wealth, right? So we can indeed fulfill, to have a stable and secure long life.
Yeah.
In the US now, there is this push for building wealth, even when people are born, right?
Yes.
Like to have some small investment, when a child is born. And I think, that's what we have to think about, right? That's how we have to think of investing going forward, to start as soon as possible. And also because of this high inflation that, in the past we were able to tame inflation, and we didn't have a high inflation, in particular in the US, for a long period of time. But now that inflation is back as well, yet again, we need to protect the purchasing power of our money, as you have mentioned.
Yeah, but we all know that health is very important. But nevertheless, people constantly look for excuses to avoid dealing with their money. For many people, managing money feels, I don't know, stressful, intimidating, or even, I don't know, emotionally uncomfortable. So, how do we pass that?
Yeah, no, and it is, and we have to recognize this, right? This is a topic that can be uncomfortable. It's a topic that might remind, right, of trauma, or might remind of tension, might create anxiety. In fact, there are lots of surveys by psychology that argue that, even the thought of money creates anxiety. But this is also why we need a cultural change, right? Because in the same way in which you feel like I don't want to take care of my health, right? I mean, this will have consequences, and that's the problem, right? These are not things that, unfortunately, we can avoid today. And so finding ways in which we can release that tension, in which we can make this topic, a topic of conversation, in which we take away the taboo, is critically important. And in my view, having it in the school will really help, right? Because it will become more and more, first of all, a topic that can be addressed in a rigorous way, in a scientific way, right? So we don't have to learn it, in another ways. I always say learning by experience is, first of all, very expensive, right? And potentially painful, right? So why do we have to learn by mistakes? There is a better way to do so. And yet again, right? That's a reason to start this education in the school, so that we can potentially ease that tension.
But many young people have seen stories of people becoming wealthy, rich very quickly, I don't know, through crypto or AI related investments or companies. Do you worry that this creates unrealistic expectations about money and investing? Because we see
Yes.
all these stories on
So
TikTok and Instagram.
yes. So there are so many myths in finance, right? I spend so much time in my class, and also in my book, right? Really talking about all of this wrong conception that we have about money, right? One is that, people can get rich very quickly. It's just not true. What we see are just few examples, right? But in general, the way in which you accumulate wealth is just slow, right? You have to go slow, start slowly, and quickly build your wealth. There are also a lot of myth that money is all the tricks that you have to use to money. For example, that also investing is a gamble, right? And investing is not a gamble, and it's not a game, right? And if you think it is, you are going to be the loser of that game as well. To me, this is one more evidence, though, that we don't have a good perception of money, and the common wisdom, the common sense is not enough. And I think it's also, what we watch might not give us, right, the good ideas, because news are always emphasizing, first of all, either the negative news. So we hear a lot about all of the people going bankrupt, for example, or we hear a few example of the ultra wealthy. And this is not a way in which we can learn how to manage our money.
Where do you see financial education, I don't know, in 20 years? And how will artificial intelligence influence, I don't know, financial education, financial literacy?
It's hard to predict, particularly in a 20 years, but I'm confident that financial literacy will become, I think, a normal or a topic that we will have in the school, in the same way in which now we have foreign languages in the school, or in the same way in which computers are in every school, right? And so, I think financial literacy will become part of what we normally do. Money management is what we will normally do in society. And I think one of the reason is also the change in demography, right? As we have less young people, and as we have to change our pension system, and as we live long, all of those changes will become natural, and it will become natural for us to make these decisions. And so I do expect that it will become a topic that we will teach in the school, and we will see it around the world, because I think in this sense the changes are the same around the world, and I see the same discussion of financial literacy around the world. The fact that we are going to have artificial intelligence makes having basic financial literacy even more important. In other words, to use artificial intelligence well, you need to have the basic knowledge. Artificial intelligence is artificial. It will not replace being able to ask the right question. And so to be able to know what to look for and to be able to know how to use artificial intelligence well, you need to have that basic knowledge. So artificial intelligence is not a substitute for that knowledge. It's actually a complement. So if you want to use it well, you are better have that knowledge yourself. Basic knowledge, you don't have to be an expert. And by the way, a lot of people think that, when we talk about financial literacy, that we want to transform people into experts. And that's not the point, right? We want everybody to have some basic knowledge, right? In the same way today in which, we teach history, we teach basic math, right? We teach literature so that people we don't expect people to go and write War and Peace, right? We expect people to be able to read a good book. And that's the same for financial literacy. We want you to be able to use artificial intelligence to make those decisions. For you to do so, you need the basics.
I often hear from people that governments may actually prefer a financial illiterate population. What do you think about that?
I don't think so. I don't think so anymore. Certainly the government or policymakers or even the financial industry, I think cannot live or cannot have a financial illiterate population in the long term. In the short term, you might cheat customer or you might cheat your population, but you will be caught, right? And it's too expensive, I always say, for any government to have a financial illiterate population. It creates an unstable society that can explode in your face. And let me give you an example, which is my own country, Italy. Italy, interestingly, has a level of financial literacy which is very low. And in 2017, a scandal happened, and it involved actually just 5 small banks in a little region of Italy. What these banks did in order to overcome the problem of funding, so they were having funding problem, they sold stocks to their own depositors, right, to collect more funds. And depositor did not understand what they were buying. And, the banks were telling them, oh, don't worry, you are buying a stock of the bank and we are a very safe bank. And they didn't, of course, explain the risk. These 5 banks, which eventually failed, create a huge uproar in the country, and the government had to change. So to the politicians who think that it's a good idea to have a financially illiterate population, it's not. The cost that people will have to pay, a country will have to pay, of financial illiteracy is enormous. I always say prevention is better, cheaper, and less painful than the cure. And it's a warning to politicians because, if they bet on it, they might actually lose. They will probably lose their power if they bet on a financially illiterate population.
You're now talking about how important is trust in institutions. Can people really become confident, investors, if they don't trust, banks and other financial institutions?
Yes, so trust is another very important component of a financial system. But let me tell you, we found that trust is also linked to financial literacy, right? Often you don't trust something you don't know and you don't understand, right? Or trust can be very, very shaky, right? If it is based on, the wrong, maybe intuition, right? So, in the case of Italy, people trusted the bank so much, right? Before, perhaps, potentially too much before this crisis. And then as soon as the crisis happened, the trust, plummeted, right? And so yet again, we have to be careful, right, in a sense of where to put our trust. And I think trust and knowledge go hand to hand. I also think it is very important that trust is almost a social capital, right? In addition to trust in the system, even society that trust themselves, that trust the politician, that trust other can work better. So I think of trust as a very positive. It's a positive asset in a society. But I think, you build trust by having a good, stable, and trustworthy and transparent financial system, and also transparent and stable and and rigorous policymaker and policymakers.
Trust in institutions can disappear very quickly. As you mentioned, we also had some experience in Slovenia with banks and other institutions. Finally, how do you personally manage your own money?
Well, I always say I have made two good investments in my life, which have allowed me to be where I am today. The first is an investment in education. And this is also what I always recommend to my student as well, right? So, invest in yourself, invest in your skills. An investment in education is going to bring higher income if one is able to develop good skills. And this is what I've done, actually. And I think, Benjamin Franklin used to say that investment in education pays the highest rate of return. It has paid a very high rate of return for me as well. I don't think I would be in a university like Stanford if I had not invested in education. And second, I really do invest in the financial market. I invest, of course, in the stock market. And I have to say, and as a recommendation to people, I invest in a very diversified portfolio, which have very low fees. So I invest mostly in index funds, which are well diversified internationally. So, what I try to do is I look for high diversification, so the risk is reduced. And second, very low fees. Because there is very little evidence that managed funds are able to beat the index funds. So, this is in many ways what we recommend in our course as well. Pay attention to the fees and try to be diversified and do invest. Because to grow your wealth today, to be able to achieve an interest rate which is higher than the rate of inflation, you have to invest in the markets. And I have to say, you have also to invest in stocks normally, not just in safe assets. And I have to tell you, I don't invest in crypto. I don't invest in crypto because they are too risky for my age profile, right? I mean, young people might actually might want to invest in crypto, but my recommendation is to invest only a very small proportion of their wealth in an asset which is so volatile, right? And by the way, another thing that I do, which is related to investing, is I insure. I have a lot of insurance because I want to protect my wealth, right? I don't want chance to drive my life. And so I have all kind of, for example, insurance, for example, on my house. I have insurance, I have life insurance, I have disability insurance, right? This is an investment. You are investing also in peace of mind, right? And, I'm also, I'm insured for long-term care in case I need, special care later in life. And so, insurance is also another way in which we can protect our wealth as we grow it.
Do you have a financial advisor, or you just make your own decisions about
I make my own
investments?
decisions, probably because I am an expert in this topic. But I have consulted advisor, in particularly lawyers, and in particular tax consultant for managing my wealth. So I do consult expert because at a certain point, and some of these decisions require much more knowledge. They are very complex, and also because sometimes it's best to not to use your own time. I mean, there are lots of task consideration, and I don't want to use hours and hours of my time to learn about some of those consideration. I think it's very helpful to use expert when it's needed, and because I have this knowledge, I also feel very confident in actually consulting expert. I know the question to ask, I know what I'm looking for, right? And I know also their incentives and their pay structure, right? So for example, when I consult advisor, I try to consult advisor that have a fixed fee rather than a fee of my wealth, right? Then can generate all kinds of potentially poor incentive on their side as they manage my wealth.
Yeah, this is great. Thank you, Annamaria Lusardi, for very interesting discussion.
Thank you. Thank you for having me today.